On to the earnings call of Reliance Capital. Sam Ghosh, EDN Group CEO at Reliance Capital, joins us right now on the show to talk about the numbers and the outlook ahead. Sam, good morning. Thanks for joining in. What's led to the income from operations growth at 47%? Which areas contributed most to the top line growth?
Yeah, so top line has grown quite substantially at 3,700 crores and nearly 50% growth, and profits also are up at 207 crores, up 3%. Now, if you look at last year's profits, we had also dividend from life insurance company. If you exclude that dividend, because this year we didn't get a dividend because we are consolidating life. So if you exclude that, our profits actually up 33%. So it's roughly in line with income growth and profit growth. Obviously, all our businesses have contributed towards this growth. If I go through business by business, our commercial finance business has shown significant growth in terms of AUM, nearly 17,000 crores, up over 15%, and profits are also up nearly 36 crores, over 30% growth in profits. So again, a very healthy profit growth. 57 crores profits. And if you look at our housing finance, nearly 8,300 crores AUM. So again, average assets under management have grown over 30%, and profits are at 30 crores. Moving on to our asset management business, again, always shows healthy profits, nearly 122 crores profit, up nearly 13 to 14%. And average assets under management also has grown to 1,67,000 crores, so a substantial increase. And if you look at total assets under management, today we're nearly 3 lakh crores. So again, substantial growth. On our insurance front, our life insurance business has shown steady in new business premium, but however, renewal premiums have grown at about 450 crores, so nearly 3% growth. And general insurance also has shown a growth of about 5% in terms of at about 900 crores, and profits are up fairly high at about 36 crores, up nearly 23%. So again, I think all our business have shown profits. Life insurance showed a break-even. Last year it had shown a loss, so this year it's shown a break-even for the whole year. And even broking and distribution today is showing a break-even. So again, all our businesses have started performing, and we expect that quarter on quarter the profits will start improving as well as top line growth.
Right. Mr. Ghosh, for your life insurance business and general insurance business, what is the outlook ahead on premium and also profit growth, especially when it comes to the life insurance business, because there's so much activity happening there in terms of deal flow?
So if you look at our life insurance business, our focus continues to be on traditional products, mainly on non-participating products, because that gives us the highest new business margins. Our new business margins are nearly 28 to 29%, one of the highest in the industry. We obviously don't focus on unit-linked business because we don't have a bank. However, our focus is to try and bring in some banks, and this will happen in the next couple of quarters. So then only can we sell some unit-linked business. So I'll say that top-line growth will be muted in the next few quarters till the bank assurance kicks in. However, ongoing business through agency will obviously continue. In our general insurance business, our top line has shown a 5% growth at about 900 crores. However, going forward, you'll find that there'll be a 15 to 20% growth in our general insurance premium, primarily because we obviously are going more and more retail. Yeah, our motor business is growing. Also, we are focusing on the weather side, which a lot of our competitors have been focusing on, and we haven't. So weather insurance / crop insurance obviously will continue to grow. So that's why we can show fairly significant growth in top line. And our combined ratios also come down to about 114% now. This takes into account our long tail business. So if you take that out, our combined ratio is below 100% now.
Okay, so what is your outlook on your AUM going forward? Which segments will drive the growth?
See, if you look at in our asset management business, our total assets average assets under management in the mutual fund is 1,67 crores, 167,000 crores rather. Over 50% is on the equity AUMs. The balance is on retail debt. Retail debt continues to grow as well as equity AUM, and that I think is helping us grow our business. And we expect the next few quarters also equity AUMs will continue to grow. We have the largest assets under management below the top 15 cities, and there on the retail side with SIP growth, SIP is also growing at over 30% for us, nearly 1.4 million SIPs. That is helping drive our equity growth.
Okay, on the on-tap banking license being cleared by government, Sam, will you apply? And if so, what extra opportunity do you see as a bank?
No, see, if you look at in terms of the banking guidelines, it's very clear that industrial houses cannot apply for a banking license. And we being part of an industrial house, Reliance Capital, obviously we will not be looking at applying for a banking license other than being part of a consortium whereby we may be a 10% investor. So that is one thought that our chairman has at this point. So we are exploring that facet.
Given the deal buzz in the market and in the sector, Mr. Ghosh, I'm not misplaced in asking you, Are you looking out for any other inorganic growth opportunities at an individual business level or a group level?
No, see, if you look at it, obviously in our general insurance business, we own 100% of the business. We have been looking for bringing in a partner. That focus will continue. However, in all our other businesses, we obviously are open to acquisitions, and we are looking at what will complement each of our business. So whether be it in our asset management business, we've already brought in Goldman Sachs business. We'll see whether there's any other opportunities in the market. Whether be it in our broking business, be it in our insurance businesses, if there's a good opportunity and if it helps complement our portfolio, we'll certainly look at that.
Well, the star today from the mid-cap space has to be Sudarshan Chemicals.